Hello, guys, and welcome to your Bitcoin report. Today is Thursday, August 23rd, 2018. And listen, I've got a theory that I'm developing. It's in the works, and it's got to do with the Fed and Bitcoin. And I'm going to tell you what it is. The Fed has just got out of kind of a jam in the last few months. They've started their program of quantitative tightening. And they've also been raising interest rates. And these two things should have been very deflationary. And by right now, bond yields should be through the roof. And we should be embroiled in the middle of a deflationary crisis. But we're not. And the answer is why? I mean, the question. Sorry. The question is, why are we not in a deflationary crisis right now? Right now, right this minute. We should be, but we're not. I'll tell you what the reason why. The reason why is cryptocurrencies. And if you're into cryptocurrencies or into finance, you remember just a few months ago when Bitcoin went up to its peak, the market capital was 700 and roughly, I'm just rounding it off, but $750 billion worth of market capital. That's a tremendous amount of money. That's more money on a month-to-month basis. Like if you put a whole bunch of months together, quantitative easing was bigger, but it's quantitative easing type of money. It's $750 billion is getting up near $1 trillion. Bitcoin is why we're not in a crisis right now. And to let me explain, let's get into the charts. Let's start taking a look at Bitcoin today. First, we're going to take a look at Bitcoin today, and then we're going to talk more about the subject that I'm on about right now, about why the crisis was held back, and Bitcoin is responsible for holding back a deflationary crisis. Okay, so let's start the charts right here. Now, the first thing we're going to look at is Bitcoin and its market cap and so on. Bitcoin right now is just over $200 billion in market cap. Now, remember, it was $750 billion. So there's about a $550 billion there, money we're talking about. But today, it's 64.35. Now, I'm going to point out something to you. Right here, we had a spike in price up almost to $7,000, and it went almost straight up laterally. Let's take a closer look at it. Right here, this green line. Now, you have to understand something today, is the SEC, the Security and Exchange Commission, rejected some Bitcoin ETFs today, from what I understand, or yesterday. Here it is right here, this article. The SEC rejects Bitcoin ETFs. The latest rejection involves 2 ETFs followed by ProShares that would track Bitcoin future contracts, another from Granite Shares, and 5 leveraged and inversed ETFs from Direction. Similar to its rejection of the Winklevoss ETF, the SEC expressed concern about fraud and manipulation of Bitcoin markets. So this is when they've rejected them. These Bitcoin ETFs, and this was published 14 hours ago. It says the SEC has again disapproved several proposals for Bitcoin ETFs. The latest rejection involves 2 ETFs filed by ProShares that would track Bitcoin futures contracts. So here's the thing. This should have had an extremely negative effect on the Bitcoin market today, but look at this green candle straight up. Bitcoin and when it leveled back off again, okay, we did have a couple red candles down, but when it leveled back off again, you can see it leveled back off to roughly the starting point. Bitcoin's got some energy to the upside right now. More energy to the upside, I would say, than energy to the downside, right at this point. And she's got a real solid floor under her. If we go back to the 12-hour chart right here and take a look, We can see the floor. The floor is roughly at $6,000. It's extreme amount of support there at that level. When she breaks down below $6,000, she don't want to stay down there. We've seen it multiple times. Right here, she broke down under 6,000, and she didn't stay there. She went bouncing right back up again. Here and here and here, always bouncing right back up again. Now, right now, she's not far off of the floor at $6,400. Okay. My tendency is to think that that this thing has consolidated. All the air has been let out of it. This is what I'm thinking, and I'm going to give it some percentages there. I'm thinking 60% chance to the upside and 40% chance to the downside. I think Bitcoin at this point probably has more upside potential than it has downside potential at this point. And we've already been through a bear market here, and the price, all the wind has been let out of the sails. Now, this is probably the reason why the SEC can reject this Bitcoin ETF, and we still are doing okay. You know, Bitcoin hasn't lost much value. If we were higher in price, this rejection would have had a very negative effect on the price of Bitcoin if we were way up there, back where we was at over $20,000. So now let's talk about what we were talking about at the start. The Bitcoin injected $550 billion worth of liquidity into the system when the bubble popped. But Bitcoin, when it's on its way up, it's also injecting liquidity into the system. So it injects liquidity in the system when it's on its way up and when it's on its way down. Bitcoin is a giant liquidity pump. It pumps liquidity. And in its final stages, down the road, when it really gets worldwide adoption, it's actually going to become a black hole for money. It's going to suck up all of the world's value, ultimately. What Bitcoin reminds me of, is kind of like a cancer, very similar to the way a cancer infects a person, you know. For the first, say, 2 years or a year, they don't even know they have cancer. The cancer's growing inside them, spreading and stuff, right? By the time they find out they have it, and they go in and they get checked, it's all through them. It's riddled through them everywhere. That's the way with Bitcoin. It's infecting this system, the financial system, and it's spreading all through this financial system like a cancer. When it finally gets to a certain point where the average Joe takes notice of it, we're going to be in the terminal stages where everything is starting to swing over to the Bitcoin, because greed is going to be what drives this thing ultimately in the end. I mean, who wouldn't? Just take a look at the track record of the dollar. Where do you want to keep your money? You want to keep your money in an asset that's lost 20% of its value over the last 10 years or so? Or do you want to keep your money in an asset that's went up from $2 to 20,000? Okay, it's dropped back down to $6,400, but still, we all know that it has an awful lot of upside potential right now. So this is the idea that's hard to get across. My new conspiracy theory. Okay? My conspiracy theory goes like this. That this thing just saved the Fed. You know, it saved their butt, because what they're doing would have caused a deflationary crisis right now. And where my mind is thinking to myself, could that just be coincidence? Or is it perhaps that the Fed has been actually... Who created Bitcoin? Where did it come from? Who's Satoshi Nakamoto? And all these questions I have. And now all of a sudden Bitcoin comes along and it injects $550 billion into the system, much like quantitative easing, right? And there's no heat on the Fed whatsoever, you know? And they can do their business right now, their quantitative tightening and everything else, and get away with it because the Bitcoin's injecting liquidity. I'm just thinking off of my head right here. What if the Fed is pumping and dumping this thing, and I mean, using it as a liquidity pump to keep themselves out of trouble? Let's take a look into this a little bit further. Now, one of the players in this thing, I mean, he's a guy that worked for the CIA. He's a guy that's in the financial thing. He's a super insider. He's like, oh my goodness, this guy is into the war games of that they play of money. Jim Rickards is his name, and maybe you're not really familiar with him, but this guy's a real insider, top-notch insider, and you know, I think he's right in there with the Fed and the CIA and everything else, right? And what does he have to say about Bitcoin? Well, I'm going to tell you. He has for years now. He's taken a very similar approach to Bitcoin as the Fed themselves. They're not really pro-Bitcoin. They don't get up there and wave flags and say, "Yay, Bitcoin, go Bitcoin." But behind the scenes, they're not cracking down on it either. Like if you take the People's Bank of China, the PBOC. They've been cracking down on Bitcoin. They've made their point very clear, obvious. They don't like Bitcoin. They don't want it. It's out to replace gold. They want to hoard gold, and they're rooting for gold. They're not rooting for Bitcoin. They want to see Bitcoin destroyed. But what about over here, the Federal Reserve? What about key players in the financial system and stuff? Oh, let's listen to what Jim Rickards has got to say about it. Here's a little interview. I'm just going to be quiet while this plays for just a minute. Let's get it started.
Currencies become the reserve currency of the future, and could gold still play a role? He's the best-selling author of Currency Wars and a longtime critic of the U.S. dollar. Jim Rickards joins us back in studio. Jim, good to see you again.
Great to be with you, Daniela.
So I know a lot of people will want to get your thoughts on how you're seeing this Bitcoin craze, cryptocurrency craze. How do you see it right now?
Well, it's interesting. I looked at it last night. I think it was $3,000 for one Bitcoin. It might be $4,000 by tonight.
2,600 as we speak.
2,600. Well, it's down a little bit off the top. Look, Bitcoin is a form of money. I have no quarrel with that. It's definitely a form of money. And when people say, the price of Bitcoin is $2,000 or $3,000, it's not an investment. It has no yield. When you buy stock in a company, you can analyze the company. How's the management? How are the assets, et cetera. When you buy a bond, you can analyze the bond. What's the interest rate? Who's the issuer? Creditworthiness, inflation. You buy real estate. There are ways to analyze all these things. Bitcoin is just money. So when you buy a Bitcoin and give your dollars to get Bitcoin, or your euros, or your Chinese yuan, or whatever it is, all you're really doing, you're exchanging one form of money for another form of money. It has no yield. There are no Bitcoin investable assets. There are no Bitcoin bonds out there. So you're just swapping one kind of money for another. So when you see the price going to $2,000, $3,000, you can say Bitcoin's going up, but you can also say the dollar is going down. In other words, people are expressing a liquidity preference for Bitcoin as a form of money over dollars. That's one.
Well, here's the thing. He is basically telling you the same thing when he's asked what gold is. He gives the same, exact same explanation about gold as he's giving right now for Bitcoin. And so he's actually comparing Bitcoin to gold in an awful lot of people's minds doing this article right here. And it's actually pro-Bitcoin. And it's not blatantly pro-Bitcoin, but it is actually pro-Bitcoin. And he's been in this stance for a long time. I'm not going to say he's a Bitcoin promoter, but he's certainly not negative on it. Let's take a look at the Fed here. What about the Fed? Now, what does this article say from the Business Insider? It says, Janet Yellen says Bitcoin is a highly speculative asset, but the Fed played a key role in its rise, in the rise of Bitcoin. Somebody invented Bitcoin. They invented it for a purpose. It's super genius. It's super genius. And what's going on here? I'm just trying to piece the whole thing together. right now, and I'm letting you guys in on the way that my mind is working on this. And I'm starting to think that, hey, you know what? Maybe this has been planned, what's happening all along from the very start. Maybe it's got something to do with the Chinese came up with a plan years and years ago to take America down. And this plan involved using gold and making a new gold standard. Um, and maybe our intelligence community or something said, hey, you know what? Hell no, we're not going to get taken down by the Chinese. We got to come up with a alternative plan. So if they already get way ahead of us, if they already got like most of the gold from Fort Knox has been leached out to China and they've been accumulating for a long time, and if they spring the trap on us right now, they win the war, what are we going to do? And maybe they said, well, what we'll do as a response, we'll create digital gold. Let the Chinese have physical gold. We'll create digital gold. This would explain a lot if this theory is correct, because the People's Bank of China absolutely hate Bitcoin. They've tried to stop it from the very start. The reason why it fell from $1,150 down to about $200 was the People's Bank of China was on the tear. They were on a tear. I remember when they were trying to kill it, you know. And China was for a while there one of the biggest buyers of Bitcoin, but it wasn't the PBOC that was buying the Bitcoin. It was the people in China that were looking for investment opportunities. This is when they were really piling into real estate in China. Okay, and they had a lot of money to spend, and they were newfound wealth. This wealth had come from selling a bunch of junky, shoddy goods to America. So this whole thing right now is kind of congealing in my mind that Bitcoin might be something that's being used as a tool to enter us into a one world currency, a digital form of currency, and get rid of cash is one of the things it would do. Another thing it would do is it would help the Fed make this transition and bring down their balance sheet, which it is doing. It's actually helped them. I don't know if that was all part of the plan or not. But anyway, wanted you guys to see what's going through my mind today. And how the Fed, I think they've never been really all that negative on it, on Bitcoin. You'd think they would be. They'd think they'd want to see it crushed out of existence, because it's obvious that it's a threat to all of the banks on earth, not just the central bank. It's an absolute threat. So listen, thank you guys for listening. Like and subscribe, and we'll catch you in the next show. Bye-bye.